Welcome to Paint Radio with your hosts, Andrew Dwyer and Kevin Hoffman.
Heck yeah, let's do a podcast, Paint Radio, the APC podcast. APC, your favorite media brand, American painting contractor. I'm Andrew Dwyer, as always. Kevin Hoffman is here. Kevin, how are you?
I'm doing great, guys.
I got a question for you. We often hear about what was your favorite class in school. And so I want to go the opposite route. What class in school did you hate the most? This could be, it's elementary school all the way up through, of course, Kevin has a master's degree in journalism from Columbia. So you could choose anywhere in those, 16, 18 years of schooling. What class did you hate the most, man?
In college, I had an intro to graphic design class, which I thought was going to be one of these layups, like rocks for jocks. But the teacher took it very seriously. And even though all we were doing is like making lines and dots out of construction paper, I got a D. And I was up till 3 a.m. On a lot of nights earning that D. So, yeah, let's just say I'm not going to be a graphic designer.
Dude, that's malpractice. And look, I'm very pro education, I'm very pro college, and I'm pro professor. But if you are just naturally not gifted at, in this case, drawing or graphics or design, and of course many people aren't, you need to be judged and graded on effort, not outcome, right?
Yeah, I mean, this was like color theory and all that stuff. I can't even figure out what to wear in the morning. So obviously I was way over my head.
Dude, I've got two answers. One, I'm not horrible at math, but I'm not really a math guy. Pre-calc in high school, God, I could do a series of podcasts on the, on math and how math is taught and instructed and how bad it can be. But I did not enjoy pre-calc. It did not come easily. It did not come with great difficulty. It just never made it. I could not understand it. And it kind of crushed my soul. I hated it. But then in my wheelhouse, I was an English major, and we had to take a year-long class on Shakespeare. Dude, I could just never get into Bill. I just did not enjoy Shakespeare. I did not enjoy that. Is that Middle English or whatever it is? I never enjoyed it. In fact, I hated it. Were you a fan of Shakespeare?
Yeah, I thought Shakespeare was pretty decent. You remind me of Hamlet a little bit.
See, and I don't even get that because who knows? If I read it, I certainly don't remember it. I probably don't even. If I read it, I didn't know I was reading. It's terrible. So, but it also shows these are all forms of art, and art, it's beauty's in the eye of the beholder. And just because you like art doesn't mean somebody else should. So, but we're not talking about art on this podcast. We are talking about not math either, but we are talking about numbers. We're talking about knowing your numbers, and has 2025 been a rough year for you, and how can you determine what you should glean, what data, what metrics from your potentially rough year of 2025 are meaningful, and which metrics may not be meaningful, and how do you choose that data so that you can make the best plan for your 2026? And so we're very fortunate to have with us friend of the program, longtime contributor to Paint Radio and to APC, and that is Chris Moore of Elite Business Advisors. And we don't only love Chris because he's great at what he does. We also love him because he's a St. Louis fan. Look at that. Commemorative Budweiser Cardinal bottle. Chris, does he have one as well? What's he getting? Nice. Welcome. Oh, is that Yachty? Welcome back to the program,
Yep.
Chris. How are you?
I'm great. It's great to be here. I always love doing this with you guys. That was commemorative from Yachty and Wayno's last game together to end a massive era here in St. Louis baseball. So
St. Louis, since I used to live in St. Louis before I moved to Colorado. So lucky to have Wayno and Yanni.
Yep.
Absolutely tremendous. Chris, I have to ask. A lot of times I have a hard time getting to the subject because I like to have fun.
That's what I like about you guys.
What was a class in your schooling? I know you especially spent what was it, like 7 years in high school? I'm
Yeah.
kidding, Chris. That's not true.
That was college. Not for a master's.
What were the 2 hardest years of your life? 5th grade. Oh, come on. I'm kidding. I love that joke. It's one of my favorite. It's like a dad joke. What was your least favorite class in school?
So for me, it was history. I also really laughed at the Hamlet comment a minute ago because I was like, there's no way that Andrew even knows what that means because I don't know what that means either. So I was not a big English person, which that'll come out really quickly in some grammar errors as we talk here. But you've seen the articles I used to send over for a rough draft, and they're called rough for a reason. But for me, it was history. I just couldn't get into it. And last week was evidence as I was with you guys in San Antonio for these amazing PCA conferences. And we went down to the Alamo. We walked down there. And I somehow left stupider than when I got there about what the Alamo was, the reason behind it. And I said, you know what? I've been there. I can say I did it. And I'm just going to go back on with my life because it doesn't matter.
You went down there thinking it was just a car rental company?
I did know it was not that. I also had no idea what I was walking into. And halfway through, we still had no idea what was going on. So, yeah.
So you're saying you're not going to remember the Alamo?
No, I won't remember the Alamo, and I do know that's a thing from that. But what happened at the Alamo and who was involved? I just know Davy Crockett was there. Do you remember that? That's all I got.
I love it.
I'm a numbers guy. I'm a business guy. I like to live in the moment, not the past.
Exactly. I love it. I love humanizing everybody. It makes it easier for everyone to relate. So
agreed.
But yeah, so we're talking about 2025 and what you can learn from it. So let's start there, Chris. Well, let me first introduce you a bit better. Chris, could you tell our audience, what it is you do so they have a better understanding of what you bring to the table? Elite Business Advisors. What do you guys do?
Yeah, so we specialize in coaching painting contractors all over North America to help them kind of treat their business like a business, right? We kind of come in, we always say we're your business partner without the equity, if you will. We work with clients to kind of help them on the business side of the operations of their business. And, finances, marketing, estimating, and sales, every area of business we kind of advise in on the whole of the business to get them from where they're at to where they want to go. I did spend a decade in the painting industry myself, so I always like to share that to understand context too, that we aren't a group of just business advisors. And yes, we call ourselves advisors, not coaches, for a reason. And we're not just a group of people that woke up with a theory, right? Like we've been there. And one of my favorite things is we get to benchmark hundreds of painting contractors all over the country and bring that data, bring that information of what works, what doesn't here to this podcast.
I can attest a little fun fact nugget about Chris Moore. He's been on the cover of the magazine, but not in his role as an elite business advisor. But we actually have a photo of him painting that graced the cover of our beautiful magazine.
That was the best surprise ever.
So, 2025. What advice do you have for contractors? Because there's so many metrics, so many KPIs.
Yep.
What numbers do you direct contractors to look at that you think are the most accurate to reveal the health of the company, how well or how poorly the company performed this year?
So I think the first couple of things, I got a few different numbers here I can kind of throw out at this. Number one, what was our gross margin look like? What did the gross margin look like, right? So gross margin, gross profit, they're interchangeable. Basically is, how much money the company made after labor, materials, subcontractors, kind of the cost of goods sold to complete these projects. And so I always like to look at the margin. Yes, the actual number itself on a monthly basis or an annual basis matters. But I look at it on the margin of it because what that tells us is, one, are we being efficient on our job sites? And two, do we have a bidding problem? So if we can look at that gross margin, for the painting industry, the benchmark we typically look at, the residential side of things, 45% is like industry target benchmark average gross profit. We want our clients to be a little bit overachievers and shoot for 50% or more. And we know we can get them there and to do that. If you're on the sub model, 40% sometimes is a benchmark just because you're going for a little bit more volume, a little less profitability and quantity there. So understand these are all kind of target benchmarks, but I think understanding what your business model is, what sector you serve, residential, commercial, new construction, different things, you can kind of look at what your gross profit margin is and compare it to what it should be for that specific niche or that specific sector, and kind of get a good understanding of, like, from an efficiency point of view, how was your year?
Just to baseline really quickly, what have clients been telling you about the year? Are they doing great? Is it another normal year? Are they struggling a little? What's going on?
So I will say, like, if maybe take the gross margin question out of that, as a whole, here's what we've seen for this year in the last 9 months. People that are doing consistent marketing have had a pretty solid year as far as volume of work sold and produced. People that were very reliant upon just word of mouth referrals, it just happens, we don't have to try for it, for the most part, slowed it a couple of periods during the year. So for the most part, some companies, I would say, again, blanket statement, talking 80% plus of the industry, it's been a pretty good year, especially if you've believed in marketing, you've done some consistent marketing, volume wise, it was a pretty good year busyness wise. We are definitely back to where we were in 2017, 2018, 2019, as far as demand, buying behaviors from consumers. We're just back to what life used to be like. A lot of people are like freaked out and it's like, oh my gosh, we're in a recession and like this is bottoming out and all this stuff. And it's like, well, if you look at a lot of the data points from what we've seen this year, it just mirrors those years before business was crazy. If you could fog a mirror, you could run a painting company, right? No offense to anybody that ran a painting company in those years, but that's kind of just what it was. There was that much work to go around. And so it made it really easy. People didn't have to spend a lot of money. They didn't have to try to get jobs. And now we're just back to kind of what we've seen. So for the most part, it's been a pretty solid year. Definitely have noticed consumers are more price conscious, right? So I'm just kind of giving a synopsis here of the year. Consumers are a little bit more price conscious than they have been. They're maybe being a little more picky and choosy. Like, hey, we really like this about the bid. We want to do this. Can we take out the laundry room and the basement and this, right? So they're maybe being a little bit more picky and choosy on it. But for the most part, it's been a pretty solid year for people.
You talked some obviously about cash cushion.
Yes.
Is that, because I would have to think or guess, because that's what I do. I guess, and then people like you correct me. If you're having a challenging year in 2025, some of your metrics could be lower, could be worse, and maybe at first glance could be alarming and say, okay, this is a sign that you're doing something wrong, your system's off, your execution's off. Or maybe it's a sign, well, this is actually more probably a function of the economy and maybe less of your specific company. So is that true when it comes to the cash cushion? Do you lower the bar a little bit when you had a difficult year?
Yeah, I think you definitely can look at it like that. I think for me, what the cash cushion really starts to tell a story of is really kind of the net profitability of the company. Right? How much money did we really make this year? People that are heading into, as we start looking at stuff and planning for wintertime, we typically put a November 1 or a December 1 target on it, kind of depending on how far north they are in the country. A lot of people here in the Midwest will still do exteriors through November. So December 1's really their slowdown. Some people up in Michigan are just happy to be done by November 1 if the weather holds out that long for them. So we kind of put some target dates on there that we want to look at. And if people are heading into this winter time with less of a cash cushion than they had last winter time, it's safe to say the year wasn't great. Right? In theory, we always want our bank account to be growing as time goes on and we're growing our business. With that being said, what we've really seen, again, kind of across the board, statement, businesses that tried to grow at a very aggressive rate, and I guess I should say like north of $1 million revenue businesses trying to double or really grow are the ones that seem to have struggled the most this year when it comes to that cash cushion. If you're going slow, steady growth year over year, up 10, 20%, maybe refining some systems, we've seen that cash cushion jump up a lot for a lot of people. But ones that were really shooting for some aggressive growth this year, they seem to be hit the hardest by it. And I think a lot of it, from what we've seen, goes back to overhead spend, marketing spend, necessary spending to get the amount of leads they need to try to do that volume of work. Right at that point, you're pretty much 100% dependent on paid marketing to get there. So yeah, I think the cash cushion definitely tells a story about the year. And again, for those businesses that were really trying to grow aggressively, we've seen a lot of them struggle to do that profitably this year. The ones that were, 10, 20, 30% growth, a little bit more steady, seem to have been able to do it a little bit more healthily this year.
For those companies that you're talking about that were pursuing aggressive growth strategies, what would you tell them? I mean, would you say like, hey, this isn't the year for that? Maybe back off on that a little bit or get back to fundamentals? I mean, what should be the strategy for that?
Yeah. So there's a lot of I told you so's that we're not saying right now. I say that kind of jokingly, kind of not. At least with a few of our clients that we've worked with that just had huge, lofty goals this year. And no slight to them, they know this. They probably come on the show and say it. So I won't say names, but they knew they were going into the year with like some big aggressive goals. Last winter was rough for a lot of people, most of them included. They burned through a lot of that cash cushion last year and just struggled to make up for it. Some of them are just now getting back in the positive for the year here in the last 30 to 45 days. And so, really the message we're trying to say is like, hey, let's solidify a little bit and maybe be a little bit more realistic about what we want to do, because they wouldn't have necessarily been in that position had they not have been outlaying a ton of money to try to get the flywheel moving, if you will. That's where it came from. So I think it's a little bit more like, hey, let's a little more slow, steady growth. Again, we can look back across many cases, and there's a few anomalies, obviously, and you guys know some of them in the industry, but like for the most part, people that are really growing at those aggressive rates, once you get north of $1 million, like it's hard to do. It's really hard to accumulate enough cash and be reinvesting back into the company. And most of, want to be making more money themselves for all the time and energy and risk going into it. So it's really hard to scale at a really aggressive rate. Again, some people have done it. They've done it well, but they're few and farther in between than what we see across the board.
Chris, one of the things you talk about is relying on your numbers, not your feelings.
Yep.
But that's I think it's safe to assume that that's not a strict black and white distinction, because obviously your gut cannot be ignored. While you shouldn't rely primarily on your gut matters. So how do you coach contractors to marry, numbers and feelings? How should someone rely on their numbers and not solely on their feelings, but include their feelings a bit too?
Yeah, I think it's just honestly important to understand what are the things to make decisions on with data and what are the things to make decisions on with your gut. And what I mean by that is when you're looking at the health of your business, right? We're looking at the financials, right? How much work have we produced this year? We break everything down to a monthly snapshot with our clients, right? Our job costing, and we look at everything month by month, end of month expenses, overhead, like how much should we kind of net profit this month based on what we produce? That's how we like to look at that, because a year is just too much. It's easy to get skewed. So we break it down month by month. But, I think, as we look through that, you have to understand like, hey, when we're making decisions about our business, we need to use hard, tangible data points. But when there's certain things too, that's like, does this feel right? Usually you can kind of lean into your gut on that, especially when it comes to those problem customers. Always trust your gut. If you're at an estimate, there's some orange flags going up, like Kevin's shirt. Orange being what's the color your shirt is. I should clarify that. Your shirt's not an orange flag. When things are going on, like go with your gut. But when you're talking about like financial decisions for your business, especially when it comes to where do we put our money with marketing, you got to have data, right? We built out a really great marketing tracker for our clients to look through and see what's the return on everything that we're doing. Is it 4X? Is it 7X? Is it 20X in some cases? What is our cost per lead through every single source in their business? What's the closing rate? Like there's a lot of metrics to go into that. When you're spending 30 plus K a month on advertising, that's not a gut feeling. That's a data decision.
I have to ask, what are some of the orange flags that we should look for?
Today's podcast is brought to you by Behr Paint and Kills Primer, now available exclusively at the Home Depot. That means you can get top quality Behr Paint and Kills Primer at an everyday low price from one trusted partner. This partnership is designed to give pro painters more value, better service, and quality products with the durability you deserve from start to finish. And yes, that means you can get both Behr and Kills Primer products delivered same day, next day, or whatever day you need, straight to your job site, free of charge. Some limitations apply. Go to behr.com/pro to connect with a dedicated rep who will help take care of your needs and save time on your next job. You're getting the inside scoop here at APC. If you're a pro, you know.
Oh man. So one of my favorite questions to ask, honestly, and I was not religious about this, but if I wasn't getting a good feeling and a good read on the homeowner, I would ask this question to him at the estimate. I would say, hey, what are some of the pain points you've had in working with contractors previously? Because they're gonna share. And some of it was a good opportunity for me to differentiate myself. You know, oh, they never called, they never showed up, they never followed through. Hey, I get that a lot. That's what we built Elite Painting on. You know, we believe in professionalism, blah, blah. But then they go down that rabbit hole of like, I called them back 7 different times. Why'd you have to call them back 7 times? Was it them? Was it like, so honestly, sometimes I would just ask that question, or sometimes you get people that are just really get in the weeds and overly analytical into, well, what tube of caulk are you going to use? And, you know, how are you going to sand the siding on our house? And I'm like, are you going to puppeteer your whole way through this project with us? Like, so I don't know, just being very attentive to the questions they ask or the comments they make and trying to find little ways to draw out some of those orange flags was probably one of the best things we ever did in estimating.
It sounds like some of the first dates I had when I was single.
What kind of shampoo do you use?
That is a great question, because you could ask, hey, what's most important to you that we do? What do you really want to see us do? And you can imagine that people would be like, oh, yeah, I don't know. It's not a big deal. But when you say, hey, what irks you? They're basically answering the same question, but in a far more personal way. So genius, Chris. Nice job. Let's talk taxes.
Yeah.
We're recording this at the very end of September, so we're basically Q4. What can contractors do? What should they do between now and the end of the year? Whether it's tax planning or tax strategies or just anything they could be doing, should be doing with eye toward taxes. How do you advise people?
That's good. So number one, I want to just hit the obvious thing, and you already said it, tax planning. Tax planning is everything to a business owner. Fortunately, I'm going to guess 95% of people listening to this still aren't doing it. So here's why you should do it. Okay. You should never be surprised next spring when you file your taxes, how much money you owe the government. That should never be a shock. And if it is, it's because you're not tax planning. I usually know by December 1st, 15th, pretty much where our tax liability lies. We do enough planning. We run a couple scenarios. We know if we land at this net income, we're going to owe this in taxes. We land here, we owe this on it. I kind of get to make decisions to dictate how much money do I want to pay the IRS based on their guidelines, not just how much does Chris want to pay, right? And so tax planning is key to what you just asked, Andrew. Like, it is definitely something we need to be doing to understand where do we sit. There should not be surprises. You shouldn't get hit with a random $40,000 tax bill that you didn't see coming. And if you did, you or your accountant is not being proactive about that. So doing some planning basically runs like a mock tax return based on where we expect your business to finish the year at and income wise. It takes a lot of variables into account. It takes your personal situation into account. And so when you do that, then you know, right? It's awareness, it's profit awareness, as we just talked about. Step 2 then is, what tax strategies can we actually execute on? So step 1 is go do some tax planning, because you might like start doing strategies and maybe not need to, or it might be irrelevant for your situation, right? So understand where you're actually going to be at. And then strategy wise, I mean, some things that I love to look into. Number 1, what can we pre-purchase this year that will recoup quickly in Q1 of next year? So as you may have a little extra cash right now heading into the fall, heading into wintertime, if we're sitting in a good spot, how can we spend some money to lower our tax liability here in 2025? and save the cash and, flow in 26. Most people listen to this are going to be on the cash basis. Whatever money you spend before December 31st this year is an expense for this year. Even if, for example, we always release our Elite Business Retreat tickets. They don't happen until July now, so that if you want to take it as a tax write-off this year, you can. Yes, you're going to get the benefit of it next year, but hey, and we have actually a client this morning we just talked about that with. So what can you spend this year? Another thing some people will do is they'll try to bulk buy paint and supplies. We have one client that every year in December, talks to their Sherwin-Williams rep and buys $5,000, $7,000, $10,000 worth of, duration, emerald urethane enamel, primer, ceiling paint. And they buy it in bulk. They pay for it this year. They take the tax write-off this year, and that's what they use for all of their projects in January. The only downside of that is you just got to take whatever you need tinted into the store for them to physically tint it. But, sometimes they might even give you a little bit of a deal to move some gallons anyways, right? So there's little things like that you can do to kind of accelerate expenses, defer income into next year. That's just an easy strategy to do if you have cash on hand to do it. That's the key.
Yeah, and so one of the things you're talking about really here is planning 2026. We figure out 2025 from the taxes, and then we look to next year where we can improve. Earlier, you talked about some companies got a little caught out this year with overly ambitious growth goals. What kind of goals should contractors be making for next year in light of the current situation? And is there a way to characterize it in terms of 20% in this area or 15% in that?
Today's podcast is brought to you by IUPAT, the International Union of Painters and Allied Trades. The IUPAT is building the future of the finishing trades through industry-leading training and education. From advanced industry certifications to cutting-edge techniques in painting, drywall finishing, and glazing, their training programs for tradespeople meet today's high industry standards. When you partner with the IUPAT, you're investing in a workforce trained to deliver excellence from day one. To learn more about IUPAT training, visit iupat.org.
I'm going to say no on that because I think it's all very dependent case by case. It's why I hesitate a lot of times to even share certain numbers and different things, just because somebody's always able to take it and be like, well, you said this. It's like, yeah, but that didn't really apply to your situation, right? So it's very case by case on that. And so I hesitate to put those numbers on it. I think the couple of things I would think through as we look to next year. Number one, how much growth might be too much based on the cash cushion you're heading into the wintertime with, right? That's always a big thing for it. If you're going into winter with a very healthy cash cushion, you kind of have some money to start throwing at problems at various points to kind of kickstart 2026. If we're going into wintertime just hardly holding on, we got to hold on as tight as we can through winter, and we may not be able to throw gas on the fire in March or April, right? So I think that cash cushion kind of gives us a big indication on how aggressive are we trying to grow, or maybe it's we need to really kind of plan out we look at everything again month by month as we set goals for next year. Maybe Q1 and early Q2 we're kind of just averaging along, but then we're really trying to ramp up in summertime. We save Q3 and maybe even early Q4 for a little bit more than what we maybe should, but we're going to give ourselves that runway at the beginning part of the year to ramp up to it. So I think the cash cushion is a big part of it. I think the other two things I would think about is, again, how much marketing do we have to do? How much of this is going to have to be paid? At some point, you can kind of break it down to a science and say, hey, if we need to grow $40,000 a month of production, okay, well, what's our average job size? What's our closing rate? You can kind of plan backwards and figure out how many leads that is and how much money does that entail? Does this make sense for us or not? And then the big one that I always like to think about, because it's easy to get missed, is do you have the infrastructure to support the growth you want? What I mean by that is maybe you're at the 1.5 million mark and you got your project manager, you got your estimator, you got your office manager. The real question is, how much can you grow without tapping out anybody on your team? Because at some point you're going to have to double a project manager, an estimator, an office. You're going to have, there's a lot of ways you can figure that out. So growing from 1.5 to 1.7 might be realistic, right? Little over 10% growth. Growing from 1.5 to 2 may not actually be possible without hiring a second project manager, a second estimator, whatever. And then at what point does that financially make sense, right? And so I think when you get to some of those peaks and plateaus in business where you have to make decisions on where are we actually going with this, it's really important to think about, because 10% growth might be okay, but at some point, again, 1.7 to 1.9 might almost be too much for your team. So I think it's a bigger question of kind of the infrastructure behind the scenes on how you're going to support it.
We're talking a lot about discussions about the year, 2025, what you're planning for 2026. But I know you talk a lot about monthly financial plans. I assume that's because, you got to have some shorter term benchmarks so that you can tell sooner than later whether you're on track or off track. So that's question one, is that the point of a monthly financial plan? And then two, what are the elements of a monthly financial plan? How do you coach contractors to do that?
Yep. No, that's great. It's my favorite thing to talk about. So yes, I think monthly financial plans are great because, again, 4-week stints. We talk a lot about understanding what your break-even number is based on like production per month. So again, you can kind of work numbers backwards. How much do you want to pay yourself? What is your overhead? What are your salaries? And we kind of work those numbers backwards based on that average gross margin we talked about in the very beginning of the episode. And we can kind of say like, hey, if we hit, I'm just going to throw a number out there, $80,000 a month of revenue, produced, right? Because that's the only way you make money in this industry is when you produce work. Sales is just the necessary precursor to that. We produce $80,000 this month. If everything holds true, if we hit our average, 50% margin and, our overhead is the 20 grand a month it normally is, and I pay myself this, as long as everything holds true, company kind of like breaks even or maybe makes a small profit, right? Like we all want to understand that number. And again, when you look at it in these 4-week chunks, it's real easy to stay on top of that. We actually started breaking that down into weekly. How much work do we need to schedule and produce every single week, right? So if the goal is 80,000 to be profitable every month, we got to sell and produce $20,000 a week, right? And that's really actionable when you break it down that micro, because after week 1, it's pretty black and white. Did we produce 20 or did we not? Yeah, we hit 20. Great. Okay. Do we have 20 scheduled this week? Yes. Do we have 20 scheduled next week? Yes. Do we have 20 scheduled for week 4? No. Okay. Goal. Make sure we get 20 scheduled for week 4 and everything else executes, right? So when you break things down into months and then down even into weeks, as far as that goes, just helps us like wrap our head around it a little bit more. When you're looking at an annual million, $1.5, $2 million goal, it's, we had a bad January. We can make up for it. So I think it's important. As far as elements of it go, sorry, I forgot that was a 2-part question. I think I want to really see, again, what's that scheduled production? How much are we producing each month, or what is our expected production? Understanding those margins help you kind of plan that. And then really understanding how much are we spending on our overhead, right? So we kind of, again, break it down into almost like a mini P&L every single month of what did we produce? What was our overhead expenses? What did I pay myself as the owner through salary, distributions, everything? And then what did the company make at the end of the day?
One more for you, Chris, and then we'll let you get back because we know you've got clients who are just clamoring for your advice. Help me, Chris. I'm guessing this would be a subset of all of this planning that we're talking about, these numbers that, most contractors are involved in multiple segments. So they might have, a cabinet division. Even if it's not a division, they do some cabinet refinishing. They do some high-end residential repaint. Maybe they do, new construction. Maybe they've got some multifamily work. I think at this point, it's safe to assume every contractor sort of groups those by category, by segment, so they can say, wow, cabinet refinishing is super profitable, and man, this multifamily is killing us. How do you coach contractors on how to track those numbers by segment?
Yeah. So on our job costing sheet, we actually have a drop down on every job that's a line item on there that we track some data points. So it's what type of project was it, interior, exterior, cabinets, epoxy coatings, whatever. We'll track it by crew, what crew did the job, who estimated it. If you have multiple estimators, same thing for PM. We'll track it by sector too. So if you want to residential versus commercial, we track all that. And then, as you can imagine, with my nerdiness, we've got a whole bunch of reports at the bottom that give you a whole bunch of data about those things. And so for the most part, we're able to look through that at the bottom if they've been filling it out as they should. And this is a sheet that we're happy to give away to anybody. Anybody wants a copy of it, like shoot me an email, put my email in the show notes if you guys want. It's chris@elitebusinessadvisors.com. I'm happy to share with you like a very simplified version of our job costing sheet. But at the bottom of it, it shows us interior jobs, exterior jobs, what's our average job size, how many jobs did we do, what's our average gross profit on those jobs, what percentage of our projects hit our profit target, like kind of gives us callback percentage is another one, kind of gives us a lot of data points about it. So I think like, again, if you're job costing, as you should be, as I want you to be, you can build those data points in there.
Chris Moore, such a friend of the program, Elite Business Advisors. The website is elitebusinessadvisors.com. You see the sign over his shoulder. If somebody goes to your website and haven't been there before, don't know much about you and Elite Business Advisors, what should they look for? What will they find on the website?
Yeah, absolutely. That's where you can schedule a call with us. We do free business analysis meetings with everybody. If you want to just have a conversation, what it looks like to work with us. We like to take an hour, just get to know you, your business, kind of share about what we do, see if it's a good fit. If nothing else, we've got a podcast too, and there's a link on our website to it. And I tell that to people because we have a lot of people who are like, we wanted to check you out. We wanted to get to know you a little bit more. And so they'll listen to 4 or 5 episodes of our podcast and see if it seems like it might be a good fit. So hopefully I put my best foot forward in those episodes, but that's the best way to kind of get to know us a little bit. You'll see me all over PCA, all the fall events will be both at Women in Paint coming up and commercial. And then obviously at PCA Expo. So if you're going to be at one of those events, I'm happy to chat as well.
Love it. I should mention Major League playoffs started today. 3 teams from the National League Central made the playoffs, made the postseason. Shockingly, the Cardinals were not one of them.
Nope.
Tough, bad year for the Cardinals, but hockey season is right around the corner.
Next Thursday.
Go Blues, right?
Wednesday. Yes. It's going to should be a good year. They're returning a lot of their players from their mini playoff run they attempted last year. So hopefully they can not break our hearts again. That'd be great.
Is it a coincidence that the colors of Elite Business Advisors are also the same colors as the Blues? I think not. Chris Moore, Elite Business Advisors. Find more info about him at elitebusinessadvisors.com. Thank you so much for being on the show. As always, thank you for all you do to help APC. That's why we're here, people. We love helping painting contractors because, as I always say, we love what you do. So go to paintmag.com. We don't load that up with a bunch of Cardinal stuff and Blues stuff. That's, this is, we're a national, as the name implies, American Painting Contractor. We're here for everybody. So go to that website, all of our podcasts, all of the back issues. You can subscribe to the magazine, to the weekly e-newsletter. All information designed for you. Thanks for listening. We'll see you next time on Paint Radio.